Good afternoon, ladies and gentlemen. Welcome to Magic Bricks Hangout series, our endeavor to trigger a buy and bring back consumer confidence in the real estate market. The topic of today's discussion is will GST reduce cost of property in India? To discuss on the same, we have Mr. Suresh, former CMD HUDCO, Vaibhav Sankla, Director H&R Block, and Siddhant Upendra Mehta, Chartered Accountant. Mr. Suresh is a civil engineer from Anna University with over 51 years of professional experience in the housing, infrastructure, rural and urban development and built environment sectors. Vaibhav is a member of the board of directors of H&R Block, India, and is responsible for strategy and business development. Having over 16 years of experience in taxation and accounting, he has been a tax advisor for many CXOs and HNIs. Prior to joining H&R Block, he was a founder director with ADROIT and has worked for the firms such as PricewaterhouseCoopers and KPMG in India and abroad. Siddhant Upendra Mehta, at present independently practicing in Pune with focus on indirect taxation, particularly VAT and service tax on real estate. He's pursuing CFA from USA. I also welcome E. Jayashree Kurup, editorial head magicbricks.com. She has been a business journalist for over 2 decades with Times of India, the Economic Times, and the Financial Express. She forayed into research in 2002. She's a regular guest columnist with a number of established media, including the Times of India and others. Mr. Suresh will join in about 5 minutes with us. Meanwhile, we can just start up the session. Over to you, Jayashree.
Thank you, Neha. Welcome, ladies and gentlemen. We are addressing one of the burning issues of the day, the GST. I'm sure there are very many people among us who would have actually witnessed the entire discussion in the Rajya Sabha, where our political stalwarts were discussing the ins and outs of what GST means to the country. It is, in terms of legislation, one of the most critical pieces of legislation that has very wide-ranging implications across all sectors of the country, and it will also impact the lives of every one of us. So now we are looking at how GST will impact the real estate market. Welcome, Mr. Suresh. Welcome to the discussion.
Good afternoon, Jayashree.
Good afternoon.
Good afternoon, Mr. Suresh.
Good afternoon.
We've also got a new entrant, Mr. Suresh. We've got Vaibhav Sankla and we've got Siddhant, a very young chartered accountant who's interested in the subject, and we thought it would be good to hear his views as well. And we've got a large audience waiting to listen to us. And like I was setting the context, GST should have touch the lives of every one of us in many ways. But everyone is trying to get ahead on what is it that it means to their sector. And since we deal with the real estate sector, we thought it is very important that we start this discussion early enough.
Wonderful.
Mr. Suresh, would you like to lay the context of GST and real estate?
Yeah, of course I can do that. This is one of the very important sector contributing to 12% of GDP. Real estate, we are thinking in terms roughly around 2 lakh crores worth of investment every year in the sector coming. It's a very major component of India's development story. But if I look at it, the components of taxation, let's put pre-GST and post-GST. The way I'm able to see it, a builder has got to get the whole delivery process. He has to get the material procured either locally. In this case, large number of local taxation like sales tax will be there, and or VAT, whatever word you want to call that, that will be there. And if it is manufactured products coming over there, it will be excise duty coming, steel, cement, glass, electrical, plumbing, all those particular items coming from big factories, excise duty comes, and on that also the local sales tax or VAT is applied on. Now that's a very major component. It ranges according to my calculation, because I am operating in Chennai, I am operating also in Panvel and other nearby locations in Maharashtra. You have a component, if you add both these things, about 60%. If you take as a material component, it can range to about 80 to 20% is a component coming on that. The taxation on the sales tax oblique VAT as well as the excise duty component. On top of it, a state like Maharashtra, it's a very big topic even yesterday, day before yesterday in the parliament, Roth made a very strong case, entry tax or octroi. So that is the other tax which is paid the order of around 5% for all the material movements coming into the city or the town, because the state collects this particular money as a component on that. Now, on top of it is a service tax component, which is for the complete labor component of construction, which is normally if you take around 40% of the total cost of construction, labor component will be of the order of around 35 to 40%, but normally 40% is taken. And 15% is the service tax. Later, previously was 12.36, but now it's 15% is service tax on that. So, therefore, you have the add up all this particular component there, namely A, sales tax oblique VAT, excise duty, entry tax oblique octroi, and service tax on the labor component over there. Everybody in the sector, I'm sure Jayashree must have heard it, that we are paying off the order of around 30% to 32% of the cost of the construction goes into all the taxation. I'm sure you are aware of that figure. And there are details available. When I go into the minute detail, maybe 30 or 32 could be a little higher, keeping the other costs they pay for building plan approval and all the other charges. So if you only talk with the GST regime coming, you should only compare apple to apple and not some other cost which is beyond the taxation component. There are fees being paid to bodies for various approvals, etc. I'm not taking that into account. So let's put it that of the order, reasonable to assume that it is of the order of around 22 to 23% would have been the cost for the sales tax oblique VAT, excise duty, and service tax, plus also octroi also taken into account, maybe of the order around 26%. So on a band between 22 to 26% would be the costing of all this coming. I have not taken into account JSV so far, the stamp duty and the registration charges. That in any case is an additional cost. There is already a strong case being made, everybody, that also should be subsumed into the, after all, the end of it, it's all a tax. That particular, even though it's a state revenue, and the biggest, they are able to, this is a cow which is able to give them a lot of revenue on that. So milking a cow, no state would like to leave on property, land, on the land transaction and the building transaction cost or registration of land or property, they may not like to lose that. On an average, it ranges from about 5 to 8%. Some people give for the women registration about 5%, and with others about 8%. That means including registration fee. One is stamp duty, other is registration fee, around 8% coming. So, to me, for a consumer, at the end of it, Jayashree, you represent consumer's interest. Am I right?
That's right.
You represent consumer interest. Give or take, you are paying around 34% is the cost. Not the cost of cement or steel or brick or land or whatever, just the cost only of taxation that a consumer is paying, including stamp duty and registration, is 34%. Now, leave out this particular 5 to 8% which I told for the stamp duty and registration. There is a case being made. CREDAI president already had made a case that this also should be subsumed in the overall GST regime. We hear that the new GST could be on a band between 18%. Really speaking, the Arvind Subramanian committee, the chief economic advisor committee, the value was 16.9% to 18.9% is the band of calculation on that. Roughly 17 to 19% is the band that has been given by the committee, which of course will be seen by the GST Council. The GST Council representing central government as well as state governments put together, they will decide on this particular rate. With the band, as I said, is 17.9 to 16.9 to 18.9, or 17 to 19%, let's say. So,
right.
reasonable to assume that this could be of the order of around 18%. Reasonable to assume 18%.
Right.
But
Now,
all the state governments feel that their revenues will come. Even though Government of India has already suggested that whatever loss they have for the state's revenue, they will make good initially for the 5 years or 6 years time period. That's been told. So you have two situations there. Yeah, a median portion of 18, or possibility with the pressure of the state government of the order of maybe around 20, a band between 18 and 20. But as far as real estate is concerned, maybe as against the 26% or whatever, it will be a little, it could be good. But there again, differentiation is made by large number of teams over there. The Ernest and Young team, Grant Thornton team, PricewaterhouseCoopers team. All of them made a differentiation between under construction flat as well as completely constructed flat. So they make a subtle differentiation there on the applicability of the GST on that. So my last word on the particular thing is if I go by the calculation of all that put together, if of the order of around 24% or 26% was coming with or without octroi over there, if you get it about 18 or 20, it will be a good aspect. In any case, stamp duty is a common which in any case was being paid. If that can also be subsumed, it will be good on that. I stop at this point of time to wrong one.
Right.
Wow.
Siddhant and Vaibhav, instead of asking you to make an opening comment, I'm going to take some of the concerns that our consumers have raised, and you can raise your issues through your answers, right? We have Anjali Purohit who has asked, the current applicable service tax rate of my city is 15% already. The GST is not good news for me. What can I do? Now, I want you to actually explain to Anjali whether GST is good news or bad news for her. Siddhant, would you like to go with it?
Yeah, sure. Basically, the question
Just keep
was,
your answers brief because we've got a lot of questions coming in, so we should be able to address more and more queries. Yeah. Okay. Please go ahead.
is Miss Anjali from a service sector?
No, she hasn't said that. She's just said that the applicable service tax. These are not people who are from the organizations. They are representing. They are coming in
They're
as
consumers.
individuals.
They're
Yeah.
consumers. Yeah.
Yeah.
Okay.
They're consumers.
Okay, fine. So basically, as the service tax is concerned, GST coming in, the VAT and service tax is levied on earlier as VAT and service tax was levied, but now GST is levied at a higher rate. But we are just looking at the output side. We are not looking at the input side. Basically everyone is looking that due to GST prices would rise, but it is not that. Basically, all the goods and services come through a chain, and that chain is broken with state and service taxes, and because the input credits for each other are not allowed. So basically, when the GST comes in, there is a free availability of credit or throughout the chain. So that would drastically reduce the prices. So as mentioned, the 15% service tax rate. But if you consider the person who is giving you that services, the service tax on that, that cost would be drastically reduced due to ready availability of credit. So it would be very beneficial. Yeah.
So Anjali, what Siddhant is saying is that you, while upfront there's a 15% service tax that you're paying, you are being taxed multiple times in the chain, and when all that is aggregated, it amounts to credit, and therefore it may be good for you. Vaibhav, your comments.
Jayashree, 1 minute. But I think Anjali must be asking not for the real estate. She's talking about some other service, going to a restaurant, buying
Yes.
some item on the market.
Yes.
She's talking, but I don't think we can compare apples to carrots here. See, if you are talking real estate, we are only worried about construction, real estate as sector under which Magic Bricks umbrella is going to discuss, not the GST
Right.
on your
Right.
FMCG item. The FMCG item is all of them are different component, food
Yeah,
product
okay.
or other component on that. So it is
Right,
not
right.
it will be very unfair. That will be a separate issue on which they will take it if it is only consumers buying large number of products for their day-to-day use over there, your cosmetics or your food items or your 100 things for your day-to-day use in a family. Please, heaven's sake, don't put the service tax put on that, and with the GST, there will be separate formula coming on that. But construction, but they are also right. Even the production of those particular items, Siddhant, as he said, will have some of the costing items on taxation will be coming in that. So to that extent, we'll have to look from that point of view. But
Exactly. Like for instance, you buy the materials, you're already being taxed. Those materials, when they are processed, and it becomes prefabricated materials, you're paying a higher tax on that. Then when the entire house is constructed or the building is constructed, there's a service tax levied. So you are being taxed multiple times, even in the real estate sector. But like you said, Anjali, don't confuse the GST impact on your daily life when you buy consumer durables to all your regular daily items to what's happening in the real estate sector. What we're discussing right now is the impact of GST on the real estate sector.
Housing and real
There
estate.
are two pieces to it.
Yeah, Vaibhav, go ahead.
Yeah. So as Mr. Suresh said, we have to distinguish between the impact of GST on the real estate sector and how GST is going to work on the other manufacturing or FMCG items or other services. I think that how it impacts the uh, the cost of a number of other items, that is non-real estate items, can also be important, because if GST results in increase in prices in general, maybe at least in the beginning, then it has an impact on disposable income. It impacts, so if I'm earning 100 rupees today, let's say paying 20 rupees in taxes, out of the 80 rupees, I'm spending 60 rupees. Now, if because of GST, that 60 is going to become 65, then I have lesser portion of my earnings available for making payment of EMI or making real estate investment. So that is one side of it. Now coming to the impact specifically on GST for a prospective buyer. As she mentioned, the current rate is 15%, and if you are buying a property which is under construction, then the rate, the service tax rate is 3.75% or 4.5%, depending on the cost of the property and the square feet area. Plus, there is 1% VAT in most cases, and so that would be about 5 to 6% cost. Post GST, I would say that there is some uncertainty now. We need to wait for details. As Mr. Suresh mentioned, the rate is going to be, or the indications are the rate would be anywhere between 17 to 19, and hopefully not beyond that. Two, we also need to know what is the abatement percentage. So currently, from the 15%, there is an abatement of 70 to 75%, depending on the cost of the property and the square feet area. So what is going to happen to that abatement percentage? There will be some abatement. So let's say the rate is, let's say 20% for the sake of simplicity. It won't be that 20% would be the rate of GST for someone who wants to buy a property which is under construction. So what will happen is a rebate has to be given to separate the cost of land or the cost of land from the overall cost. Right. And I think we need to see the details as to how that rebate will be calculated. There are those who believe that the rebate will be calculated based on the ready reckoner rate, and if that be so, I think impact could be different in different cities. So for example, in a city like Mumbai, the land costs, in a city like Mumbai, the land cost is very, very high. So for that, the percentage of rebate could be much higher in a city like Mumbai. In a city like, let's say, Ahmedabad, for example, or maybe Pune, for example, the land cost would be a much smaller portion of the total cost as compared to what it is for Mumbai. And then the rebate will be much less. The smaller the rebate, the higher the effective tax rate. So we still need to know what is the headline rate, maybe 18, maybe 19, maybe 17, maybe 20. Two, we need to know what is the mechanism for rebate for exclusion of the cost of the land. And once we know the mechanism, then we have to figure out, what would be the net rate. Now, what could happen is, I'm getting a sense that initially, in some cities, the tax rate will go up. So currently, the tax rate is, let's say, 5 to 6%, approximately VAT and service tax. Probably it will go to maybe 12, 14% depending on how the rate is and what is the rebate in a particular city. I think because of the factors mentioned by Mr. Suresh and also Siddhant, the input credit, I think developer will be able to reduce the cost by a few percentage points. Maybe on a net basis, there could be some increase, maybe 3-4% increase in the total cost.
Yeah.
What it may result into is the buyers may defer their decisions. So they would want, instead of paying maybe a tax at a rate of 12% net of abatement, for example, they would rather say, I'll wait for the property to get complete and then I'll buy, or I'll buy something which is readily available, which is already constructed. So that is one side. The other piece could also be that maybe after 2-3 years, once everything settles down, when the input credit mechanism is used in full cycle, I think there will be a positive impact on the prices from a consumer perspective. As Mr. Suresh mentioned, the total tax portion today is probably 25% or upwards of 25%, excluding stamp duty. And if it is brought down to let's say 12-13% net of abatement, then I think that will be some significant or noticeable benefit which the consumers can expect, but that will take time. That will not happen immediately.
So we've got Mayuresh from Mumbai who asks, is it wise to delay a buying decision by some months to allow the sector to settle to the GST's impact? Now, from what you said, and as I understand it, it will take a couple of years for this the whole issue to settle down. So as a consumer, what should you do? Hold your investment or go right ahead and say that let it play out, let me buy according to my schedules?
Siddhant, you want to answer that?
You can do. Not here.
Vaibhav, you can take that.
Yeah. So as I mentioned, we have to, one is, the first answer is the devil lies in details. We still need to know the details. So that is number one. So once we have clarity on the top line rate and two on the abatement, I think we'll be able to actually see what is going to be the net effect. And as I said, if the ready reckoner rates are going to be used, then probably the net rate could be lower in a city like Mumbai and could be higher in some other cities. So we'll have to wait for the details. And two, if you actually experience that, or if you actually see that after we get the details that the rate is going to be increased a little bit, then you will have to factor that additional cost while making your investment decision. The investment decision should take into consideration a lot of factors, not just GST. GST is one of the factors. If he is, for example, expecting a return of, let's say, 15% a year, for example, then that extra 2% cost may not be big, right? So there are a lot of factors while making an investment decision. Just so far as it relates to GST, we'll have to wait for more clarity. That's what I would say.
If I could add to this, Mayuresh, right now the real estate markets are not very buoyant. So if you're, this is a good time to buy into the market because the values have been flat for 2 years. This is a good time for you to make your purchase. If you're going to delay thinking that GST's impact, let it settle down and then I buy, the chances of the markets actually going up or the regular market forces taking over is also very high. So don't delay a decision because of GST. GST, as I understand it, will take a year or two to play out and settle down. But right now, your real estate decision, purchase decision, is not dependent on a GST impact. It should be more on, is this the right time to buy? That depending on market prices.
Yes, you can make a subtle differentiation between because large number of completed units are there in the market
Absolutely.
in the NCR region, both Gurgaon as well as Noida,
Yeah.
as well as Mumbai, Pune, Bangalore, Chennai, all those other sectors there. So if it is already completed unit is already there, GST will not make any impact on the particular thing. And so the prices are at the lowest level at this point of time today. I think they should go ahead and purchase. So the advice we should give to Mayuresh is that if he is taking one of those completed house in any one of the locations there, GST is not going to be any impact whatsoever. And there and all the other costing issues and taxation is already incorporated in the costing level already given there. So therefore, make a differentiation on that. But if it is going to be new projects on which construction needs to start there, and therefore, if it's like work, it's a work under work contract will come over there. At that point of time, the new GST formula will come in the picture. But even there, if it's going to be lower, well and good, but don't have to wait.
Yeah.
Good point.
Vaibhav, after your response, there is a question that has come from Jaya from Chennai, who says his question is for you. Her question is for you, Vaibhav. Can you define input tax credit? What does it mean in real estate terms?
Good question. In input tax credit for the real estate sector or for the developers, I would say that the service tax the industry pays or the developer pays for all the services which it purchases. The VAT, the current VAT, which will be subsumed into GST uh, uh, on all purchase of goods, and excise duty which a developer pays on purchase of certain items such as uh, uh, steel, cement, for example. So the when the developer makes purchases of goods and services, he pays VAT, excise duty, and service tax, and the input credit is for credit of these taxes paid by the developer, which would be available under GST.
Right.
And that will be a GST, that will be goods and services tax under the GST regime.
Okay. There's Mayank from East Delhi who says, is the GST positive news for developers? If so, how? Siddhant, you want to take that?
Yeah. For this question, Mr. Mayank, there are 2 points I would point out that before the GST came into the current regime right now, there are a lot of compliances. You have VAT, you have service tax, you have all the octroys, all the taxes, all the compliances are boiling down to a single level compliance, and that's just a GST. So this is a huge benefit that that I would say for a developer, that all these compliances, all these headaches, that would boil down to a single level compliance. And the second thing is the majorly, as I mentioned before about the input tax credit, as Vaibhav has mentioned, that all the for a developer there are a lot of taxes, state taxes and central taxes. So basically, and the credits for all these are not allowed with each other. Yeah, so you don't have a credit of service tax and central excise against the VAT. But now, as all these are subsumed into GST, so all the things you purchase, you have a credit, and you can use that against your liability. So that would reduce the cost of for a developer by say 3 to 4%. So that would be a huge benefit, according to me, for a developer with GST coming in.
Right. Mr. Suresh, you represent the developer community here. Would you care to respond to this also?
Yeah, 2 areas. I forgot to add one more item which is called customs duty. Large number of the building construction industry also bring in products from abroad. Today only you got the big news about steel and other related thing coming from China and other related particular thing. The 60 or the 170 or the items which goes over there, they got some anti-dumping duties being provided for those. And if you want to import material, you still pay a customs duty on that. Those which are imported, new emerging technologies which are coming in India, India needs a lot of those particular things from different parts of the world for faster construction and all that. So if that particular thing also gets subsumed into the GST, well and good. We need clarity on that. Excess duty, more or less, there is some clarity on that. I'm sure Siddhant and Vaibhav can tell that the customs duty for imported building material products which is leviable, will also get subsumed, is an area, a grey area that requires clarification. Very, very important. The second area, Geethambar Anand already from CREDI's president already have indicated that the stamp duty component also should become a part of this particular one and that cannot be treated separately. At the end of it, it's a cost to the consumer. Okay, as far as developers are concerned, as Siddhant and Vaibhav rightly put it, it is an area of multiple agency, multiple returns, and different types of interpretation for the local sales tax, central sales tax, excise being paid separately, service tax authority, entirely a separate agency for calculation. That's a big amount of issues to calculate the service tax. We have whether you put 35% is the labor component or 40% is the labor component. All those issues keep on coming at regular intervals. So you are able to have one single level, one location you pay that, the amount you paid on the total product of the particular area, which is very positive. We are able to bring down all around 4 to 5% reduction is possible. It's a very, very positive aspect we can work on from the developers' point of view. Developers would welcome the GST in a very big way, very positively. The only thing is some of this particular gray areas to be sorted out. In particular, since we are operating in Maharashtra, since Parliament had a discussion that there could be the octroi component still being permitted because the Mumbai people who deal with Mumbai Municipal Corporation, where octroi is a big money for their whole revenues on that. Suddenly you remove the octroi or entry tax being reduced on that. That's a very big amount of money going away. But if that is also going to be over and above GST, that's not a good news.
Right.
That's not a good news. Entry tax or octroi over and above the rationalized GST. I use the word rationalized GST. Rationalized GST covers A, as I said, the local sales tax, the VAT, the excise duty, as well as the service tax. And on top of that, if you have to also pay the stamp duty is other component. Two components, therefore, requiring a little amount of this thing is A, the entry tax or octroi. There are many states which do that, primarily Maharashtra. The other component is, of course, the stamp duty and the registration cost.
Right.
Otherwise, on the face of it, Jayashree, it should be a positive side.
Right. Even though you have all individually explained, I think from the questions that I'm getting, people are still a little confused and we may have some repetitive queries, but I think it's good to address because people find this interesting enough to keep asking. We've got Deepak Jindal from Delhi who said, I have booked an under construction property for which possession is in December 2016. I have not yet registered the agreement. I want to know what will be the impact of GST on prices. Please advise.
I think you should go ahead because if it is going to be given in December, we are already in August. Most of the construction component would have been already completed. They must be in the finishing touches of painting and other related things only. Otherwise, you'll never be able to hand over in December. That means all those issues, A, related to the sales tax, the VAT, the excise duty payment already done because all those materials already consumed on that, and service taxes are also to be paid simultaneously within a time period on that. To me, it is as good as completed. If you are saying that this is going to be handed over in 2018 December, 2017 December, I would have given a different answer. If it's 2016 December, close the eyes and go ahead.
Just go ahead, Deepak, and buy your property, register it because there's not going to be significant changes between August and December.
Jayashree, one more reason why I'm telling is the new GST regime will come into operation hopefully by 1st of April 2017, provided the state governments go through all this particular thing. The IT control regime that's required, they are still working on that particular work on taking care of all the other local tax, state tax, central tax, and then bringing under the one common the architecture for the GST application has to be done by the IT component is a very major thing. Hopefully, effectively with all that, states doing the job, then the GST council deciding on the rate, third one the IT component for operation, which will make everything into effect. The GST will come into operation hopefully only from 1st of April 2017, or as FM said, hopefully at least 17-18 in the early quarter, if not April. There is an indication there. Therefore, he should not, our friend from Delhi should not Wait until that time. If it's going to get in December, close your eyes and go ahead.
Okay. There are three questions. I'm going to read all these three questions and I'm going to ask each of you to comment on this. There is Meenu Singh from Mumbai who says, how is this law going to affect the prices of resale properties in cities like Delhi, Mumbai and Bengaluru? Shall we assume that buying ready-to-move properties will be costlier now? This is Meenu Singh from Mumbai. Then there is Nikhil Yadav from Gurgaon who says, I'm in a dilemma. Should I wait for GST to get passed and implemented? Will the total tax come down for under construction properties? And there's Lokesh from Greater Noida who says, is GST going to increase the property rates as the total tax is expected to increase by 20 to 22%? I need your advice on this. Vaibhav, we'll start with you. What I want you to make clear, and these are three questions I read together because clearly people want to know under construction, if I'm buying from the secondary market, and if my property is, if I'm going to go in for purchase, should I buy or not? Your views on this.
The first question was about whether
Delhi, Mumbai,
GST
Bangalore
would result in increased prices for ready possession properties.
Yeah.
Right?
Yeah.
I think that at least in some cities, initially, there could be a slight increase in the cost of under construction properties. And maybe because of that, some people would want to go for ready possession properties. I don't know how much impact it will have on the property prices, the prices of the ready possession properties. But I think it will have some positive impact, or the prices might go up just a little bit because of that extra demand for the ready possession properties.
Right. The second one is, if you have a property that is ready in the from the secondary market, not just ready to move in right now. This is from the secondary market. You're purchasing from somebody else, an older property. Should you go ahead? Will it have any impact on GST?
I don't think it should have any impact on the secondary market.
Okay. And the third one is, if I'm looking to enter the property market, should I wait or should I just go ahead and buy?
As I mentioned earlier, buying a property, there are a lot of considerations. GST is just one of them, and GST would be one of them, as Mr. Suresh mentioned, only if you are thinking of buying a property which is under construction. As I said, we'll have to wait for the details. As we get the details, we'll get to know, what will be the initial impact GST would have on the property prices. But that impact will, in my view, will not be so significant for the person who is making that decision. I think there are other more important considerations, such as the interest rates, for example, the cost of capital. If he buys it today, is he getting some discount? The impact on the property prices, the under construction property prices, is not going to be as significant as some of the other factors.
Right. Siddhant, your views?
To a certain extent, I agree with Mr. Weber. I would like to add that for the completed properties, I don't know if the buyer isn't aware of this, but for the completed properties, there is no impact on the GST, because GST is only levied on the under construction properties.
Absolutely right.
Yeah. So for the first query, the first question you had, that would it affect already in the secondary market? So there would be no impact, or I would say comparatively, there would be no impact in the cost structure, and so the prices of that. So
right.
The first question is, yeah. And for the under construction properties, can you hear me?
Yeah, we can hear you. Go ahead.
Okay. For the under construction properties, I would say currently, as we have discussed before, that 2 to 3 years it would be settled. And if you want to know that we should go and buy a property right now, so it is the correct time to buy right now. So go ahead.
consumers, we just want to remind you that the GST regime will actually kick off only by April 2017 earliest. So if you have your properties coming up, sorry?
That too is probable. Yeah.
Yeah, and
Not aware of that.
therefore
Not before.
you don't need to defer your property purchases. You need to understand what the impact of the GST is on the real estate sector, but you don't need to defer your purchases because there are many other considerations, like Weber said, the cost of finance. There is the cost of the property in the market today, the state of the market. All this means that your property purchase is dependent on so many factors that you should not really just look at the price of property, the impact of GST on the real estate market. There is Tina Sharma. Neha, how are we doing for time? How much time do we have?
Rishi, we have time. We have time.
We have time. Okay. There is Tina Sharma who says, will GST introduce transparency in the real estate sector and reduce the cost of ownership of homes? Two questions. Is it cost of ownership? I think we've more or less covered in the previous query. But will GST introduce transparency in the real estate sector? Go ahead, Siddhant.
2 points in this too. Basically, as I said, there is a chain. So with GST coming in, with all the goods are covered under GST, which are purchased. Mostly 90 to 99% of the goods would be covered under GST, the purchases you have. And basically, due to that, a lot of transparency we would have in the real estate sector, the costing, and plus the finance cost in that. The second thing, there would be also Real Estate Regulation Act. That also has put up a lot of compliances and a lot of transparency in the real estate for the developers to be complied with. So I think these both factors are making would be very much beneficial and would increase the transparency to a great level.
Yeah. Actually, that's a very significant point. GST is not one reform alone that we are looking at. We are looking at the Real Estate Regulatory Act, which is likely to bring more transparency. We are looking at various other acts which are running parallelly. So combined together, maybe they will have a more significant impact. Mr. Suresh, Vaibhav, you can comment.
I think GST, some people also call this as a black money legislation for the reason that it would be very difficult in the new robust regime to have significant cash sales because the revenue leakages are going to be stopped because of the GST, and I think that is one of the important things. This will have some significant impact on the real estate market. I think a lot of people have not talked about it or have not realized it, and I would also like to know some views on that from Mr. Suresh.
I agree with both Vaibhav and Jan that transparency is going to come in over there from multiple agency at different points of time, the payment being made for various taxation and different interpretation will move depending upon the state level one. There will be one central authority which will be collecting the GST, and that is going to be for central side. Even though housing is a state subject, real estate is a state subject. This is the first time all the taxation will be collected, indirect taxation will be collected at the central level and then divided over down to the states. It's very interesting. For a state level, local level topic, we are going to have the centralized control on the total amount of operation. That's a very important aspect. Ease of doing business is going to be fantastically better. No two opinions on that. On the taxation side, along with that particular thing, also ease of doing business for approvals, faster approvals, including completion certificate. Nobody can sell anything unless all approvals are in place through RERA. It's not a discussion of RERA, so let me not hijack it there. But keep it also as an underlying point. Both put together, and also the overall the monsoon and all that. I personally feel that you will have a very good news coming very shortly, 3 put together of the RERA along with the component of the GST and the overall macroeconomy looking up in a large way. We'll have interest of at least 50%, basis point interest rate reduction in the home loans by December 2016, 100%. This is my reading of that. That will be a very positive news. And as Vaibhav or Shitan rightly said, even that particular cost of your home loan is an important component. What do we pay on that? So put together, it will send the right signal. For under construction, as far as I think Meenu or somebody wanted, he's got a property he wants to sell off straight away.
Yeah.
All those things that are completed, which is already bought in the secondary market, all the taxation is already gone in. So you will not have a sales tax or a VAT or an excise duty or a service tax or octroi coming in there, because everything is already captured in that product already. Only in the case of newly construction product, which is going construction projects under construction, taken up for construction or midway during construction, only those particular projects will attract the GST regime on that particular area point of view.
Okay. We've got Pranjal. We've got Pranjal and Rutika Bharanwal from Raipur, who have said multiple taxes will get reduced, but much depends upon the rate that is fixed. What is your opinion? Please guide.
I think we have broadly indicated the committee's report. The chief economic advisor's report is 16.99% to 95 to 18.9, which means a band between 17 to 19. Therefore, the 18% figure was indicated, and you also indicate up to 18% it won't have inflationary tendencies in the project. When you make it more than that, there's a possibility of slight trends in inflation. We are reasonably under control for inflation. That's a good news, and therefore that issue will also be kept in view. But the only area which the finance minister and the GTC council, which is the finance minister along with all the state government finance ministers put together, we already had 2 or 3 voices coming from West Bengal and Kerala. I am already getting 25%, 23%. Therefore, with all these other indirect taxation, if you make it lower than 20, it will be bad. That means to that extent. But the only thing is, even Tamil Nadu has also said that. But clarification came later from the same finance minister of Tamil Nadu that we didn't know that the whatever loss they incur will be made good by the central government. That's a clarification that came today. So I'm sure all these are work in progress. It will all come. Lok Sabha will discuss next week, 8th or 9th or something like that. Then all the state government will pass it in 1 month's time period. At least 16 of them are promising that. But the rate is the most important thing. I think if we are able to peg it at 18 or maximum 19, if I may say, 19, which is the highest of the band for the committee of the under Arvind Subramanian, I still we feel that the real estate and construction industry at 19 GST is a win-win.
Right.
For the industry, and more than the industry, for the industry, the thing is ease of doing business, single handling, all the bookwork to be done, and one point action, and ease of doing business, everything is good. And as a consumer, it is the total cost of the particular product being reduced, as again 30% over. But stamp duty and registration is still a grey area. We have not been able to see whether that will be precluded. And local tax or octroi. Okay. Grey areas.
So actually, that is I think that is the issue that she's raising. These two people are raising that while GST is good, and I think the 16 to 18 band is what we're looking at, all the other the taxation needs to dovetail into that, right?
Yeah.
Right. Okay. Vaibhav, you have anything to add to that?
No.
Okay. There is Mihir Sharma, who from Hyderabad, who has said, how is this GST calculated and which are the conditions one will have to meet? Where are we supposed to pay GST? Now, this is something, and there is Tejas Kant from Delhi who said, what is in it for me as an end user? I think what the end users want to know is, will it complicate their lives, or is it something that will automatically get sorted out as taxation?
It will include all input costs, leaving out the land costs. It will have the infrastructure costs and the building construction costs all added together. It will have a material component and labor component on the total costing of that particular thing the GST is applied.
But the end user doesn't have to tax himself with the calculations.
No, but for them to know what is it taxed on.
The breakdown of the cost.
If GST is levied on all the input costs, leaving out the land cost.
Other than, yes, other than the land cost, absolutely.
Other than the land cost. And here, the two things, we are actually telling you what are the components that are going to be taxed, and we are also telling you that you don't have to break your head over how to compute that taxation. That taxation gets calculated, but how does a consumer know? Suppose I am in, and here, this is a query I'm going to put to you on behalf of our consumers. Suppose I'm buying in Mumbai or in Bangalore or in Delhi. Three different states, three different regimes coming there, and there is a central component and a state component. If apples to apples, when I buy in each of the cities, will I be taxed differently? Will the GST implications be different for me in three different cities?
I think it will be different. The building construction costs in big cities may be including infrastructure cost and the building construction cost put together, or on a band around 3,000 to 3,500 rupees a square feet. But the opportunity cost of land must be 16 to 20,000. So you sell a product 25,000. The construction costs, including infrastructure cost, is only of the order of around less than about 20%. In some case, even 10% only. But smaller cities and towns like Hyderabad, Bangalore, and all other one, building construction cost still be a larger component of the order of 50% or something like that. Opportunity cost of land still has not gone to the higher level area. So therefore, it will have the immediate impact to be felt not in metropolitan city, not mega city like Mumbai, but Thane will get the benefit. New Navi Mumbai will get the benefit, Pune will get the benefit, where still the opportunity cost of land is still only around 50 or 60% of the total cost of the product. So that is where the whole thing comes. Impact will be more felt in all other metropolitan cities over a lakh plus or 10 lakh plus, but still not a mega city of 50 lakhs or something like that. There the land cost is still around 20 to 30% of the total process. When you say I'm going to get 4,000 rupees a square feet or 5,000 rupees a square feet, the whole property, you put around 2,500 to 3,000 will be the construction cost. Remaining will be the land cost component. But when it gets to 15 or 20,000 or 25,000 rupees square feet, land cost dominates. Am I right?
And I think it could also vary within the same city.
Yeah.
So, for example, even in Mumbai, the percentage of land cost would be very, very high in an area like Lower Parel, for example, and much less in suburbs, some of the suburbs.
Correct.
Right. So if
markets.
And if you're buying at the peripheral markets or the suburban markets, the impact would be less. The impact would be more.
GST impact will be more.
Impact will be more.
Because the proportional construction cost of the total cost of the product is still high. That's why.
That's right.
So in a city like Pune and Bangalore, the impact will be much higher than a city like Mumbai in general.
Okay.
In the South Delhi, in the prime market.
In the prime markets.
Prime market.
Here I've got a very interesting question from Deep Makhija. I think this is one of our last queries here. There's Deep Makhija of Chandigarh who says, I'm a broker who has just got into the construction industry. I would want to know whether real estate is poised for growth and to what extent. Will GST actually determine the growth of the industry? And what is the implication for brokers?
You want me to take it first?
You can.
Because others are not coming up, that's why. So, well, first of all, if you want to get the construction industry, you should know the team should be there. Whether you have brokerage background, law background, chartered account background, or construction background, the construction industry, the team should be there available for you to get into it. Being a broker is only intermediary between a product being built by a builder and a consumer who is going to buy. That's a broker's role. You are only an agent, a real estate agent between a transaction process you are helping on that. That is different from the product itself being developed and created and built over there. GST comes, take my word to Mr. Makhija, the GST will come into operation for everything other than the area that you have been dealing with. You have been dealing with brokerage and the product is already made. You are only ensuring the thing is served over there. But once you get to the construction industry, the GST will come into operation for all the input costs on the building materials and all the infrastructure materials and the labor costs going into that. That is number one. To the second point, yes, the whole industry is going to grow in a very, very big way. We went through last 3-4 years of little lull period, a plateau was there. but signs are already showing on that it's going forward. Very rightly identified by all our distinguished panelists there. RERA is an important component, GST is an important component, the need for overall economy itself psyching up, which will also bring in demands, and monsoon, which has come all over the country in a very positive way, will also bring the demand side from the rural and the small and medium town going up. That will overall push up all the economic indicators in a very large way, and therefore real estate is the first one which will take the benefit of that and take it forward. And therefore, from that point of view, we can get into the particular thing, but have a right good team to deal with that, who can deliver, plan, conceive, and deliver that product well with the right product level and the right price level.
Right. Siddhant or Vaibhav, do you have anything to add?
Yes, I think GST is one going to help the economy overall, though it will take some time to see the effects. And if the economy as such benefits, then real estate is definitely one of the leading sectors of the economy, contributing maybe around 10 to 12% of the GDP.
Correct.
I think there are other factors which Mr. Suresh mentioned. See, last 3-4 years, the real estate sector has been kind of stagnant, and now it is very well poised for good growth in the coming years. I think the interest rates. Look at the bond yields in last couple of months. The bond yields have dropped significantly, and that gives some indication that the interest rates will start falling. And once the interest rate fall, your EMI reduces, so the buying capacity increases. I think then there are other reforms which Mr. Suresh spelled out. I think given all this, I think there would be very bright days and years for the real estate sector ahead.
We have one last query I'll take, and this is from an allied industry. There's Vincent Gabriel from Pune who says, do you think the allied industries on which real estate sector is dependent on may make property a costlier affair? What is the impact of GST on the allied industries, which means the materials, the glass, the cement, and input industries, as well as tiles and processed
they should be very happy, because they don't require different multiple billing coming on that. Let's imagine all those basic building materials. You don't have to go through a local sales tax or a VAT component. You don't have to separately submit excise duty, a different one, the allied industry people are looking at that point of making their job easier between those who procure and those who are going to deliver the building material components or fittings or components or various other related items. It makes it very transparent, and these were subjected to different type of interpretational aspects on what type of thing to be levied, etc. So clarity will be there for all those particular things, and with least amount of local interpretational issues there. 1 point billing, all this clarified in their invoices, and therefore it should be positive, is my way of looking.
Will GST be applicable to commercial as well? Last question, and then we close the event. Commercial
development.
Yeah, commercial real estate as well.
Of course,
that's the last query that popped up just now.
It is a no-brainer question.
Applicable for commercial rental.
Because you require infrastructure, you have to put building. Commercial activity, living inside the house, you'll be working in the office there. The walls are to be built, the roof are to be built, infrastructure. Anything of construction is involved. Anything of infrastructure is involved. The land cost again in this will not be incorporated there. But all other components. Only thing is, you will have a larger amount of component in commercial real estate, because your air conditioning, your heating, your lifts, services, building services and plumbing services, fire services component, etc. becomes higher. So yeah, the differentiation between a commercial complex building and a residential building is that the cost on all the services which are coming over there, including the fire sprinklers, your air conditioning, your lifts and escalators, all those things component will be a little much larger than in the residential loan. Will be predominantly on the building materials and the services. So that is the differentiation we have to keep in view. But GST is applicable equally to all those products which you are going to equipment, machinery, component. Also, it will come on that.
Okay,
Siddharth? But this is where the customs duty component, which I mentioned a little earlier, will have an impact, because some of those latest technologies which are coming into the market in commercial are imported products from the latest new generation technologies, being aircon or lifts or escalators or fire detectors, glass, etc., etc.
Credit will be available on the countervailing duty of the total customs duty part, the CVD.
That's a good clarification. Why don't you open out on that? That's a good point. The one which you just now said is very important. Why don't you open out for a minute? Why don't you open out for a minute?
Vaibhav, would you like to elaborate on that, please?
No, that's it. I think of the total customs duty, the CVD, which is kind of equivalent of the excise duty, that is available for credit under the GST regime.
Good. That's a good clarification. You should have told earlier, beginning, but here the end, you got that. Good. That's a good input.
Okay. Closing comments from you, Vaibhav?
I think it is something which is positive for the economy. However, it will have, it may have some initial negative effect. Devil lies in details. We have to wait for some more details, specifically on the abatement, on the gross rate, etc. But overall, very, very positive.
Okay. Siddhant, closing comments from you?
I completely agree with Vaibhav. GST is a lot, would benefit a lot to the economy, unless we have that all the clarifications which are needed. It's not that clear, but on overview of that bird's eye view, I would say it's a very good and a best tax reform till now.
Okay. And Mr. Suresh, on behalf of the development community, you support the GST?
Yeah, it is transformational. It will have a definite impact. It will also provide growth of the order of at least 15% growth coming into the real estate sector in the latter part of 16-17. Of course, 17-18 definitely it will come into a very large way in this particular context. And to me, I think at the end of it, to the consumer, it will give a product which is more beneficial and which they'll be happy, because they will get large number of things known in a transparent manner. This, along with the RERA put in over there, will have and also interest rate reduction because of macroeconomic, three things put together will give a larger amount of growth aspects for the real estate sector.
Right. Thank you so much, all of you, and thank you, consumers. Keep those queries coming. We will be discussing the GST as we go along. Whenever there is any announcement which we feel is beneficial or detrimental to the real estate sector, we will be picking it up for discussion with our experts. Over to you, Neha.
Thank you, Jayashree. Thank you, Magic Bricks.
Thank you.
I'm really thankful to all our guest speakers for participating in this hangout. It was indeed a great session. I would also like to thank all our participants for the support in making this hangout a success. Thank you all.
Thank you. Bye-bye.
Thank you, Jayashree.
Thank you. Bye-bye.
Thank you.